Okay, welcome back. Apologies, the video stopped recording partway through that last video. So we had said that margin of safety is sales minus break-even point. And again, I suppose I should say that the margin of safety can be calculated in sales or units. But again, if it doesn't say, then we'll take it for granted, and it doesn't say here, we'll take it for granted that it is in units that they want the margin of safety calculated. And if they did ask for the margin of safety in euros, we'll talk about how you calculate that in a moment. Next thing to say is if they want it in units, then your sales must go in units in the formula, and your break-even point must go in units to get our margin of safety in units. So again, the budgeted sales figure is this 80,000 units that they're expecting to sell. And so we put in 80,000 here, minus the break-even point. Well, we've just calculated the break-even point in units here. So we put that in here. So 80 minus this 52,917 gives us 27,183 units. So what that means though is, well, they're expecting to sell 80,000 units. They'll make no profit or no loss if they sell 52,917 units. So they can afford to drop from 80,000 by 27,083 units before they start making a loss, so that they have that margin of safety that they can not sell as many as they thought they were going to sell. This 80,000, they can sell 27,083 less before they start making a loss. So that's your margin of safety. So again, if you were asked to calculate that in euros, all you would have to do is multiply by 11. So again, you can multiply the final answer by 11, or you could have put in these two figures in euros as well. You could have had that multiplied by 11 originally to put in here, and the 80,000 multiplied by 11 is this 880,000. So you could have had 880 minus whatever that was, giving you your margin of safety in euros. Okay, so next, part B. So part B says they want to calculate the number of units that must be sold in 1999 if the company is to increase its net profit by 20% over the 1998 figure, assuming the selling price and cost levels and percentages remain unchanged. So again, we are going to use a formula to calculate this. But before we use the formula to calculate the number of units that must be sold, we'll first of all do one other calculation, because they just say if the company is to increase its net profit by 20% over the 1998 figure. So we'll use that information to calculate what is this net profit that they want, or they're talking about increasing to. So they want it to be 20% greater than the 1998 figure. So the net profit here for 1998, 130,000. So let's start with that, 130,000. And the way I would, or the way you could, I suppose, increase that by 20% is you could get 20% of it and add it on. Or what I like to do is I like to get 120% in one go by multiplying by 1.2. But whatever way suits you. So multiplying by 1.2, just get my calculator here. Is 156,000. So then the question becomes, we've calculated what the net profit they're talking about is. So the question becomes, what's the number of units that must be sold if the company wants a net profit of 156,000? That's what they're really asking. And we have a formula. I suppose the title for it is, well, it's not a standard title, but it's a bit of a mouthful, however you describe it. But the formula is number of units required for a given profit, or for a target profit, whatever you prefer to call it yourself. And our target profit in this case is 156,000. So we want to know the number of units we need to sell, that we're required to sell, in order to reach this target profit of 156,000. And the formula is quite straightforward. It's very similar to our break-even point in that it's fixed costs plus your target profit divided by contribution per unit again. I'm going to just shorten it down to CPU. So fixed cost plus target profit divided by CPU. And again, excuse me, you can calculate this in euros or units normally, but since this is the number of units required, we really want it to be in units. But if you then wanted to, like the amount of sales required for a target profit, you could always take your answer and again multiply it by 11 to get a euro figure. So fixed costs, again, total fixed costs were 254,000. Plus the target profit we want is 156,000. Ooh, too many zeros. Divided by our contribution per unit again is 480 from our marginal costing statement above. Okay, and again, put all that into the calculator. 254 plus 156,000 divided by 480. We get an answer, might be hard to see there, of 85,416.6 repeating. So we again always round up here. So 85417 units. 85417. So from the calculator it was 85416.666 repeating. Excuse me. So we always round up regardless anyway to 85417 units.